Now I do the bias chart in the European session, so you can see here that obviously this was when the euro was still trading at 420, and we're talking about we're in a low liquidity environment. So right now, I think the market is more scared than anything else, and you don't want to stand in the way of the dollar. And I think that the people, we talked about this a little while ago. People thought that the euro was crap as it fell down here. Then we turn around, summarily rally up 300 pips, and then everybody's trying to go and buy it. And we were saying, hey, look, it's going to have to come down to this 468, 480 is for back and fill. We get the back and fill, we rally, we push them up higher, and then the wheels fall off the caboose with the boom market, and we're heading lower. So where's the support now? We're going to take a look at that. It's going to be right now. I mean, I guess we've got a great level here at 369. So you'd have to look at the lows, the outright lows, which I believe it's 352, but we'll go on and take a look. 351. We're going to go in and put it just below that. Even though we've got a nice, on a 2-hour chart, if on a closing basis, if we can hold this 369, but realistically, we have to say that the support's going to probably come in around 340 if they were to go and test the stops here. So let's go and update this bias chart, which was done in early European trading. I usually have that done before we get started. Obviously, we'd already started working lower. And the resistance, currently for right now, we've got that targeted, not targeted, we're set for 506. Realistically now, the resistance is going to be the top of the zone here. It's actually just above the zone, so we can put it just above here. Let's go and mark this off and update this. It's going to be 490. That's going to be resistance at this point. So in this second half hour, we're trying to get through the rest of the majors. As I mentioned before, not only have a little liquidity environment, but obviously, which one of the problems or issues that's driving this market is the sell-off in the bonds, and similarly also the sell-off in the bond market. We've come into support in the bond market, but good luck, like I said, trying to convince someone you got to be long the euro here. Now we are into a pretty good area, this 369, and I mean. I wouldn't be initiating any short positions, and we've come in a situation where we're greatly oversold, but it's still low liquidity. We saw this happen, and I was mentioning it in the first half hour. This is reminiscent to what we saw happen here. Remember this? And nobody wanted to own the euro. And slowly we started going to turn things around. As I said, if you look at it, over the course of, although we do have NFP this week, we're going to look at that. The consensus is around 177, basically what we had the last time. If you look at the move that we had here, and the market started to go in and gently come off of those oversold levels, and then before you know it, we got this little spark up here. As I mentioned, in this type of environment where it's low liquidity, people just wonder where is the bottom, and I don't think anyone's in a rush to step in and buy this. So what the market's going to go and try and do at this point, I believe, is we're going to have to gun these stops here and see how far they can take them lower. And as Blake likes to say, you have to think of it as being one of the things that will help you. Arthur says, thanks, Pauly, for adding gold and the 30-year to the bias chart. Oh, you're welcome, Arthur. I think that was a recommendation of Denise, I believe it was, who asked if we had some other markets. I'll tell you what, we'll say this, gold is holding up like a champ if you can take into consideration with the dollars and the bonds. So keep that in mind. And you want to keep it in mind for perspective. Here's the deal. You have to put yourself in the other trader's shoes. So when we took this rally up here, I think most people realized, wow, what a crazy thing, it rallied up here. But then people were saying, I want to buy it here, I want to buy it here. And remember, we talked about this. We said, hey, look, they're going to have to back and fill. They're going to come here. We even marked this off. Remember here, right here, it said between 480 and 460 is what they're going to be looking for. And they came into that and we found the support. But like I said, as we start off the new year, official day, and the bunds come under pressure, nobody wants to stand in the way because you just don't see the liquidity. So it's hard to get people to take the other side. And anybody that's long, and let's look at the euro itself specifically, that's long from here, here, or 5, those people are just shaking in the boots. And it's just a matter of how far can they press them? Where are their stops? And so anybody who's even thinking about getting long, good example. I was talking to one of the guys, Anders, and Anders was saying, you know, I want to see if they get past the 377, and I want to see if the cash dollar index can get past the 357. So that's what everybody's looking at. Even the people that think that it's a good deal or reasonable risk, they even want to see the stops triggered. You know, they want to see how far we can push them. So I think you want to keep it in perspective because remember, when this market came undone and nobody wanted to own it, and finally we slowed down, then we just started progressing higher. And then I don't think we're going to see anything like this, but we could start to see the market tire of itself, just like we did down here when there was just like seemed to be no bids. And then generally we started correcting from an oversold, and it actually didn't happen until very late in the session. So from a 2-hour perspective, and we're looking at a 2-hour chart, you don't want to see this thing close. It can go below it, but you don't want to see it close below 369. That would open the door for even lower, and I think we had some levels down here, the 276. But now, at this point, we'd have to look for the test of this. So let's go and take a look at this on a fib. So this would be 295, which would be the 127% extension. So let's move this here. And this was 654. Actually, there's 371 here on this test because we look at the most recent low, recent high. That's 371. So if we get past this 369, this 352, it would appear that this would be a good area where they would go and target for. If they can get past, I think the market's overdone, but like I said, good luck trying to stand in front of it in a low liquidity environment. Well, like I said, for now, our support comes in at 340 with resistance at 490 here on the euro. Let's go into the cable. As I mentioned to you all, I switched over to a new computer system. One of the, I'm trying to think, misfortunes or whatever, but right word, but I lost my cable chart. So I do have a printout, and I'm going to have to start to update things. We talked about the 122 last week. Remember, we talked about this. I believe this was 22.44? Yeah, 22.44 in here, and that we could test 122. The cable is holding up quite well, and actually holding up against this 22.44 area quite well. The support still comes in at 22, so nothing's really changed on that, and especially look how far we are from here. And the resistance here is going to come in at, for right now, 23.62. That's going to be our resistance, so 23.62 and 22. So let's take a look at this. We have that marked as 79 because remember that took out those highs. We can go and leave it in there, but you're going to see a passel full of selling if we come up here to this 23.62 area here. But remember, this 79 is what takes out the area here, and we had that marked off. It was actually that level right there. And we did get above it and see some selling, so I'll go with that 2362. Let's go and update that. I have to get the cable updated. And also, the Aussie dollar was another chart that I lost. Even though I transferred the data, did what I could, it's lost. So I can pick it up on well, actually, it won't pull up on the system because the other system had the screens going across, and for whatever reason it saved, and I'm not going to hook it up. So I'm going to see if I have an Aussie chart I might have posted somewhere, and I can use that. But in the Aussie, nothing's really changed. 71.52. I'm going to have to update the chart. As I mentioned, I lost it when I moved to a new computer system, but 71.52 remains a support, and the resistance here, no changes there, is 72.76. So let's go in and take a look where we stand here on the dollar Swiss. And we've updated this. We've come actually back to our old friend, the top of the zone, and we came right to the pip. Look at that, 313. Obviously, it just hit that. We would need to get a 2-hour close above 313 to open the door for higher. And that higher, if I remember correctly, was like 360. Remember? Doggone, where are we? Well, I remember we had, I guess we were looking on that. Oh, I know what we're looking at, because we were looking at the, we were looking on the weeklies. And I think it was 362 would be like a little bit of an overshoot. So we have to get above 313, but 313 is resistance here. I think we've got that marked off already on the dollar Swiss. Yeah, 313. And let's take a look at support here. So they have bumped their head up against this 313. As I mentioned, in order for us to get beyond that 313 to extend ourselves for another leg, we're going to have to see a 2-hour close. Now, the 2-hour close, we're about an hour and a half away, a little bit less than an hour and a half away for the next 2-hour close here. So that would be 9 a.m. Eastern time. I think I already marked this off. I think it was 240, but we'll double check. Yeah, 242 is what we're going to see. Support now comes in for the dollar Swiss, which is right in here, 242. So really a ways off. We've got this 280, and they've scaling this 280, and you can see here that on the 2-hour chart, we closed just above that 280, which opened the door for the test of 313, which we've come up to the 313. Once again, I think the dollar is somewhat overextended, but good luck trying to stand in the way of it. People are going to try and let the market play itself out before they're willing to really step in. They want to see, what they want to do is they want to see what stops, whether it's the dollar Swiss or the euro or the cash dollar index. They want to see the stops that are beyond it. They want to see this to trigger stops and see, do we have a new leg higher, or do we kind of fizzle and start to pull back? If they fizzle and start to pull back, then people will be willing, from a risk-reward standpoint, to step in and take the other side. Now, that being said, let's go on and switch back into the bond market just for some perspective. Remember, we were talking about this, and actually, I was hoping that they were going to come down to this 48.27. I thought that maybe they'd take it one more last stretch here when they threw out the baby with the bathwater. And they did make it to 48.27, but we talked about, me and the guys, 49.02 and 48.27. I thought they may be able to take one more dip in here. You can see here that not only that, we're at 49.13, and you can see the significance here, because remember here, oh, come on. Here's let me go and move this up here so we can see this better. Here we are looking at it on a 4-hour chart. And we talked about this last week. Remember the 49.11? And we talked about this quite a bit, how the market had fallen down here to 06, and we came up here to right up here towards this 11, you saw the touches here. We came back and we had this triangle, and we thought this was a value area on the way back down. So we come up here, and once again, they keep taking the other side. Remember, we talked about that. They keep taking the other side of the trade until they're proven wrong. So we come to 49.11, they take the other side of the trade. We dip right back in here. We come back up to here to 49.11, and they take the other side of the trade. And we said that this is what generated this spark of buying here, because people that had taken the other side trade then said, okay, I'm going to keep doing it until I'm proven wrong. And then obviously they were proven wrong here. That opened the door once again for us to go higher. And it goes back to what I've been talking about. These markets just trade level to level. Because look, here we are, we got back below 11. But on the way down, we talked about, and I tweeted out that chart, 49.11 is major support or major level, with 49.12 being the 38% of this move from here. Okay? I was hoping we might even dip into the 47.27, but we came into that 49.02. Now we're back above 11. So if we close up here on a four-hour close, which actually would be another, like I mentioned, an hour and a half, the 2 hour and 4 hour happen to coincide this time. Those closes, that's going to be significant if we can reclaim the 49.11, because it's going to tell traders, hey, look, there's nothing left. You can start to now buy it back on dips. You'll see anyone that's short here, you'll start to see a little bit more short cover, which would probably take us up to about 49.23. But that's going to go in and slow the ascent of the dollar. So if you start to see, once again, we talked about, will there be any stops, triggered, and will they start to run out of gas? One of the things you want to be looking at is taking a look at the 30-year bond market and seeing, okay, are we starting to see some semblance of a bottom, so we can see where the euro or some of these other dollar pairs start to slow down. So let's go and move us back into the chart, the 2 hour charts. Yeah, Denise was asking about the S&P. I may not even get to the S&P today. As I mentioned, a transition to a new computer. The new computer doesn't like my Reuters feed, which I do have it on the other computer sitting next to here. It doesn't like the password for Lightwave. It doesn't like the password for one of my accounts. It won't allow me to trade in that particular account. So like I said, and when I did the transfer over of stuff, I lost the cable chart, I lost the Australian dollar chart, I lost the Kiwi chart. So I'm having to play catch up on a lot of stuff, not to mention I'm still going to have to get with IT or tech support for the Lightwave, get with the Reuters folks, and get together with the thing for the account, the one that won't let me trade. So I doubt I'll be able to do anything with the S&P today, maybe tomorrow. But so let's go and move on. We're clipping along on time right now. I don't even know what time it is right now. Okay, it's almost going to be time for another break. So let's take a look where we stand here on the dollar yen. I thought it was important to point out what's happening with the 30-year bond, even more so with the dollar yen here. So one of the things we talked about was the dollar yen, and we talked about the significance of this 1815. We talked about that because remember, I was even short. I got short. Was it 2 weeks ago or a week and a half ago? I got shorted like at what, 17.98 or 95, something like that. And I had it on here, and this was kind of keeping me like in the game. I was thinking, hey, as long as they don't take out 18.15 on a 2 hour close, I'm still okay. And I remember, covering down here. And I actually think it was on this one right here, because I remember I ended up covering and we took this move down here, and I was telling people, hey, get the hell out of Dodge if we come down here and so forth. So this 1815 is significant. So we got above this 1815, and could we open the door higher? Yes, but this market is kind of fizzling a little bit. Not a whole lot, but just a little bit. And one of the things you want to take a look at is the 30-year bond. How is the 30-year bond doing? And to be quite honest with you, considering how far the 30-year bond has fallen, the dollar yen should be much higher. The dollar yen should be closer to 1875, or at least right now it should be at 1850, and not. I think it should have taken a whole brand new leg up higher, a big leg higher, not just this amount here. So one of the things you want to go and keep an eye on, once again, is the 30-year bond. And one of the things that I like to do when I'm looking across the spectrum is what I do is, if, let's say I'm looking at the euro, and I think, and we talked about this, I think the euro is over down here. But one of the things I'm going to look at before I do that, I'm going to look at the dollar Swiss. And I'm going to look at the 30-year bond to see how it's doing. And I'm also going to take a look at the dollar yen. And so if I see, okay, the dollar yen's it's rallied up here, but it probably should be higher. The bonds have really taken a hit. They've come into support. They've even overshot support. But they're kind of holding in here, and they're above the key level right now, which is 49.11. They're at 49.13. The dollar Swiss came up to 3.13. So what I try and do is I try and look across the spectrum. That gives me a little bit more additional confidence, as also some meat on the bone to say, okay, wow, look at the cable. The cable's holding well above 122. If this bond market can hold up okay, this is probably a good value area for the dollar. I mean, for the euro. Doesn't mean it won't stop going lower, but I'm saying on a risk-to-reward basis, pretty good, decent area here for the euro. When you look at it overall, you got to keep an eye out. Right now, the bonds are on the highs at 49.14. So I try and look at things across the spectrum. So let's go and take a look here now at the cash dollar index. So we were talking about this, and I've even mentioned that Andrews was saying, hey, let's see what it looks like if we can take out 357. And that is our key level here. You see here coming across with all these touches. That was the previous high here, and you get all these touches here. We could never close above it. So 357 is the key level. We're not that far away from it. So 357 is going to be resistance for right now. And I believe we've got, actually right here, move this in a little bit closer. Support comes in at 291. So resistance at 357 and support at 291. And we got that marked here. 357, 291. The dollar yen, for right now, we're actually above it, is 18.15. And support, we mentioned here, is that 1720 area. We talked about that before, as that being a good area at the time for shorts. Remember that, where we ran out of gas right in here? Right? We're going to open this up real quick. Remember we talked about that 1725, and when we came up, I think it was on Friday, we came up just a little bit short. We saw a very nice sell-off. We actually came up to 1720, and we're talking about an entry at 25, so that was a nice pullback. We saw the same thing come up here. We got up to 1750. We came all the way, went to 20. Now we've opened the door here with the balloons coming apart, and they are above 1815. But for right now, we're going to look at 1720 as support for the dollar yen. So let's go and take a look before we go on break. Will be the dollar CAD. And we come back, we'll take a look at the rest. I don't think we've updated this one. We have 3540 and 3448. Let's get this updated here. So right now, resistance is going to be 3495 with support at 3350. So we'd have to get a 2-hour close about 3495. My take is the dollar CAD should be doing a whole heck of a lot stronger, or doing a whole heck of a lot better. Although right now you have to consider that the crude oil market is doing quite well. So that's keeping a chain on the dollar CAD. But for right now, resistance is going to be at 34.95 and support will be at 33.50 right in here. So let's go mark those off. And it's already time to go in and take a break. When we get back, we'll look at the other majors. We'll also take a Probably a little bit more closer look at the bond market, but we'll also take a look at the gold market, which has held up relatively well in spite of the dollar strength and bond weakness. So we'll join you back in a few minutes, and thanks for joining us here on the Morning Edge.